Everyone is asking, is a buyer's market on the horizon? It's tough to say, but May's numbers just dropped, and what we're seeing is a major shift in the market dynamics. So I'm here with Eric Gashko with Neo Home Loans to break it down today. What we're seeing on the sales side of things is that the activity is slowing. Unfortunately, closed sales are down 4.5% year over year. That does include residential and condos. Our pending sales dipped 1.3%. Now, that's the lowest May closed sales count in 5 years. The buyers are being extremely cautious with everything going on right now. Most are on the sidelines. Activity is clearly softening, and that's what we're really seeing. And you couple that with the inventory spike, gosh, inventory jumped 20% year over year. We're now sitting at nearly 22,000 homes for sale in the Metro Detroit area. The month supply of inventory is up 19%. We're all the way up to 2.5 months supply of inventory. So what does that mean? That means that there's a lot more options for buyers and more competition for sellers. So Eric, let's talk about the mortgages. And you and I were just having a conversation offline. It seems like even though I just gave the doom and gloom news, well, if you're a seller, what's on the horizon here? What are we potentially looking at this year?
Yeah, I think right now, like you had said, I think we're in a little bit more of a balanced market. And I think from a seller's perspective, it's changing your frame of mind, right? That hey, this isn't a terrible market. It's just not what we're accustomed to for the last 3 or 4 years. But from a buyer's perspective, that demand I think could increase again. It's still out there, but like you said, people are sitting on the sidelines. One, they don't want to feel like they are, all the people that I think are willing to pay more for a house and really need to get into it have found their house. Now we're getting the people who really would like to buy. The demand's out there. We have, household formations are still up. There's buyers out there, but maybe they don't have to transact right away. And there could be some, bluer skies on the horizon. We have a bank deregulation deal that's going on with the Fed right now. That is got a lot of potential. When passed, it's not supposed to pass for like 60 days from now, but that has a lot of potential to lower interest rates. We have several Fed members, unfortunately not the chairman, but several Fed members kind of breaking off rank and file and saying, "Hey, it's time to start looking at cutting rates. This unemployment is going up. We have inflation is basically under control. GDP came in negative. It was negative growth in the first quarter. There's a lot of things pointing towards, hey, rates coming down on the horizon. I think people are seeing that and they're saying, hey, I can wait a few more months to, before I really need to pull the trigger."
Yeah, so I mean, let's talk about, all the things just coupled together. You talked about GDP, you talked about potentially the conversation that you and I were having before we started just a few moments ago about maybe the treasury, the bond market really, getting quite a bit better and pushing the rates down. And you said some experts are, if and when that does happen, that could push rates down. Did you say 3/4 of a point?
Sure. So when Scott Bessent, the U.S. Treasury Secretary, talked about that, we watched him on an interview, and he thought that could be worth potentially. He quotes tens of basis points. Well, a basis point, 10 basis points is basically 1/10 of a percent. So when he says tens, that would imply that it's at least worth 20, right? Multiple tens. Now, if you talk to George Lacey, who advises the Fed on these things, foremost economists recognized nationally and really worldwide for understanding this stuff, he thinks it could be worth 70 to 80 basis points, which would mean 0.75% or so. So likely it'll file somewhere in that range if it's passed, but it is definitely something that would be good for the bond market. It should increase the demand for US treasuries if done. And again, supply and demand, just like in the housing market, right? If someone wants it, they got to pay more for it. So in the bond market, what that basically means is if you want it, I'm not going to pay you as high an interest rate to get it. So that's going to lower the overall interest rates being charged in the bond market, which would include treasuries, or not treasuries, sorry, include mortgage backed securities, which are what your mortgage interest rates are based on.
And so, I mean, I think that's what we really need. And we talk about it all the time. So we're still at a very low supply of inventory, even though it's creeping up to the 2.5 months supply. It's still low, right? But it just feels like the buyer demand is just as low, right? So what that's doing is, if demand is right here, and inventory is right here, it really is balanced. Even though they say 2.5 months supply of inventory is very much a seller's market, but that doesn't factor in the demand level, right?
Yeah, it's
So
balanced, but it's low, right?
yeah,
It's you can be balanced but crappy. That's kind of where we're at.
yeah. I
It's
mean,
balanced but crappy.
the numbers don't lie. I mean, homes are taking much longer to sell. The average days on market is up to 34 days. That's 14% year over year.
Mhm.
The pricing, the median sale price is up 3.6% year over year. That's up to 285, but it, like, that's good, right? We're getting, median, not average. Median is up 3.5% year over year, but the price reductions are rising. And this is a kind of an astonishing statistic. Only 32% of listings pended in the same month that they were listed. That means only 32% of listings coming out are selling in the first 30 days. I'm not like a math whiz, but said 68%. The other 68% are having to reduce or go past the 30-day marks. The the price growth is slowing, and the buyers are pushing back. They're finally pushing back. If a home is overpriced, they're not going after it. That's really so I mean, technically it is a seller's market, but only if you price it right. That aspirational pricing, it's just not working anymore. Today's
Yeah, that's where I
buyers,
was gonna go.
they're
Yeah,
way too informed. Today's buyers are way too informed. They're too smart.
and they've been, and most of them been sitting on the sidelines. They've watched this whole thing escalate up and up for probably several years now. They've been in the market, so they're realizing how hot it's getting, and they're seeing these same homes that they're looking at 2 years ago, and now they're priced significantly higher, saying this just doesn't make sense to me anymore. And I'm with you, Ben. I think there's still a ton of opportunity, but we have to get back to a more realistic expectation of pricing, right? Just because you heard, from a friend of a friend that they got way over on their house, well, you got to take that from an individual, like, isolated experience. Now it just can't be said broadly to that every home is just gonna fly off the market anymore, because I don't think that is a realistic expectation to have
Yeah.
more.
Especially if that friend or neighbor sold their house in the first quarter of 2023.
Yeah. Yeah.
The rates were still at 3% in
Yeah.
Q1 of 2023.
Yeah. No, 100%.
Um, I mean, at the end of the day, whether you're buying or selling, what worked last year, it simply does not work today. We've all have to adapt here. I think the market is really rewarding the smart strategy, and not the guesswork, not the aspirational pricing. It's all about price if you're a seller today. Um, if I didn't have my own house right now, I'd be in the market as a buyer for sure. I just think it's a good time to buy before these rates do pull down. I'm seeing it. Is was just a lot. It's just a lot less competition right now.
Yeah. Yeah, I'm seeing the same thing. There's still definitely competition out there for houses that are hitting the market instantly and are move-in ready and priced correctly, we see those, it seems to like go for quickly. But yeah, I also have a lot of buyers out there that are just sitting on the sidelines saying these prices are just not worth it to me anymore. I'll sit and wait it out. And those houses, like you said, then maybe they're coming back 2 or 3 months later after the prices are reduced and they're making those offers. But if you're trying to sell fast, prices is the total key. And I hear not just from you, from all the other agents I work for or work with, that the real contention is people wanting to overprice their house right now. And
Yeah.
it just sits and it becomes stale. And instead of going on the low end, generating that massive demand, bringing in everybody to look at it, and then someone falls in love with the house and they buy it. And it's usually, if you can get two people to do it, it escalates and you get more for it. But this aspirational pricing is just not that strategy, went out in the 80s and 90s and early 2000s.
Yeah, it's that's a good point because I'm still closing listings that are, 103, 105% sale to price list ratio. We are still getting the multiple offers, but what that requires is a lot of staging, the presentation being amazing. Mostly it's on the houses that have the updated kitchens and baths and the upgrades and things like that. But it also takes, we look at the historical data, we look at our competition, and we say, okay, the data is suggesting a number here. Let's price it just a little nudge under, and that's what's really getting them the most money at the end of the day. Because we can still drive the multiple offer. It just takes a really good pricing strategy.
And it is, and I think I think that's where people get caught up. Is not this negotiation is not your standard negotiation where I start high and then we meet in the middle. It's no, you want to take the leverage from that from that negotiation by having multiple buyers interested in your house so that now you have the leverage and we can work that price up. It's not the strategy really anymore. I don't see working where you're trying to you're starting high because you know you're going to sell it for less. It's you want to start low and really go up from there.
We'll tell the market will tell you what it's worth every single time. The market will tell you. So awesome. Well, that's this week's news. Hopefully it's, some better news next week. If some of these things that you were talking about, Eric, if they end up happening and those rates come down to those low, that low six mark, I think we've got a really good market ahead of us.
Yeah.
So
Yeah.
I'm
Hopefully that's
optimistic for the year. I certainly am.
absolutely. Absolutely. Could be a really nice fall.
Yeah, perfect. All right, listen, everyone, have a great weekend. It's not 4th of July weekend this weekend.
Nope,
That's
not
next
yet.
weekend. Well, enjoy your weekend anyway, and we'll see you next Friday.